Hello, everyone. Sorry for being a bit late. I had some technical issues, and now I think everything is just fine. So I hope so, at least. So I would firstly like to welcome you to this to another webinar with Forex, and here is Andria for those that are new over here. So I will present today the art of price action trading. Usually the people that are attending in this webinar like fancy or already using price action, and they are actually price action traders. I don't know how many of you are using this kind of approach with your as your trading strategy. So hopefully, if you are already familiar with this way, I will help you to take it a step higher or to get improved or something. And for those that are new here, hopefully um, I will help you to try and to see actually the beauty of reading the prices over there, the candles, the price action, solely the price action. So first of all, guys, I would like to make sure that you can hear me loud and clear and you can see my screen as well. Let me take the hi here. Thank you very much, Robert. Always on time. Always been the first that telling me that all the technical is fine and we can go for it. Thank you very much. Serious, yes. What is price action? Can you elaborate? That is all. That is what this webinar is all about, my dear Prashad. So, okay. Since I know that the audio and visual are just fine from your side as well, just to remind you that for any questions that you have for anything, and maybe something that I didn't manage to explain throughout this 1 hour session that we have, you feel free, actually, please don't hesitate to send me an email at webinars@hotforex.com, and I will reply in the same day. I will try to reply in the same day. If not, I'm always replying the next day. Never. I'm trying to reply as soon as possible. So, since we have a lot of things to cover and to explain what is price action, I am obliged to go through the admin. Okay, so give me just some minutes, some seconds to go through this disclaimer warning. Okay, and we will be ready to start. So the material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment Any investment in leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure in our website. So, admin is out of the way. Okay, I will not spend time with introducing myself. I would like to just start with the webinar, just to go straight forward to the topic. Okay, there's a question which is not really relevant with the particular webinar, but I will reply to you. So Prashad is asking how much profit a retail trader should target per week or month? Can you please say, okay, I cannot really tell you exactly how much profit you should aim. However, your target should be with an appropriate risk management. And I'm saying risk management like a normal, a quite good percentage for risking for risking your balance, your money per month. Let's say should be around 5% or 2%, less than 5%. Yeah, that should be around there, in my humble opinion, of course. So you need to do an appropriate risk management and money management, okay? Because you need to target. Oh, it's not clear. The audio is not clear. Okay, Emmanuel, please try log in and log out. I think it's fine from my side, but let me just audio. Yes, it's good. Okay, the connection looks good. So yeah, as I was saying, a good level should be up to 5% of your balance per month. Okay, but yeah, for some people this might be tiny. I mean, this should be, Andrea, that's like peanuts or something. So yeah, if you risk too much, you will lose even like way too much as well. So you should focus on, maybe you can visit our money management webinars, and our risk management webinars. But yeah, you need to step and to stick on a reasonable percentage per week or per month based on your trading style. Okay, Prashan, thank you. So today, guys, as we said, we're going to cover price action trading. So what is price action trading? Simply saying, trading without any indicators on your chart, solely by checking your pin bars, your candles, by checking your support and resistance based on the candles, of course. So is price action trading is just the decisions that we make based on price alone, only price, nothing else, no indicators, no expert advisors. Um, so yeah, that's it. Solely based uh, on the candles, on what the price action is telling us. Sorry, guys. At the same time, I'm facing a bit of some comments regarding audio again. Don't know what's going on. Hopefully, it's just a few people that yes, Matthew, it is recorded. Don't worry, as every single webinar. So Matthew wanted the presentation slides as well. So I will try to provide you the presentation slides right now through the handout. Sorry, I missed doing it earlier. I should have done it earlier. Let me just quickly drag and drop the PDF, my slides in a PDF format, so you will be able to have them like after I finish our webinar. So where is it? Just quickly, I will put in the handouts. Hopefully you can see up. Okay, give me a second. I know that you have lost the. Okay, ready. Sorry guys, sorry. Should have done that earlier. So handouts, where is handouts? Handouts, drag and drop. Okay, quickly. And webinars. Here it is. Okay, perfect. So you can have it right now in the handouts section. Okay, guys, that's my slides, today's slides in a PDF format. Okay, so let's move on. This webinar will I will demonstrate in this webinar everything you need to know in this interactive webinar, including how to identify support and resistance areas, how you could read the key candle patterns and what these key candle patterns are, and different exit and entry points, stop losses, targets, and so on and so forth. Okay. Um, so how will you get everything's okay on my side? Perfect. Okay. This is applied to every single market, forex, future, indices, commodities, and so on and so forth. Jose, how can we download the PDF on our PC after the lecture? Actually, you can do it right now. If you check, there is a along with the question box, there should be a tab called handouts. So over there, you can download the PDF format. If you're struggling to find the PDF, let me know. Okay, so let's start. Okay, I need to go through some theoretical stuff first of all. So price action, as I already said, is simply another term for the movement of any kind of asset or security. So price action trading is a trading strategy that is neither technical analysis or fundamental analysis. Okay, guys? No fundamental, no technical stuff, nothing, solely, purely with the price of move of the price with the move of the price. Sorry, this is what price action trading strategy is. um, so rather than price action traders observe recent price movements as technical indicators and then place their trades based on their individual decision making. So this is what the price action traders do: observe the price movements, and they use the price movements are there as their technical indicators, and with based on that the price movement, they are taking their places in the market. So so you already know that the market and the assets are trading based on the perception of bulls and bears, right? So based on who has the upper hand, if it's bulls or if it's bears, then the price is moving on that direction. So who are the bulls and bears? Is it really us as retail investors? No, definitely not. You just to know, for people that might be new over here, that um, that we are just now we are just only the 10%, maybe less than 10% of the entire market. So we had a little impact in the market. Now, so all the rest of the 90% is solely banks, hedge funds, people that trade billions. So it's not us. We are trading just basically only on with our savings accounts, maybe, or so. Yeah, definitely it's not us retailers that we are moving the market. It's all those institutional traders, big traders trading billions. So um, sorry, where is whoop, I skipped by mistake. So that's so as I was saying. You should know that it's not us, that it's not our decision making and our position in the market that really shakes the market. Okay, it's all those big the gigantic institutions that are trading as well. So however, the art of price action trading, okay, and the beauty of it is that other than that, it can be applied in every single market. It can be also, it is all, the beauty of it is that it can be applied in every single time frame, and it's very good for short-term trading as well. So that's why you may find out, or if you speak with other traders, you will find out that many short-term traders rely exclusively on price action in order to make their trading decision. So um, And don't forget that technical analysis is a derivative of price action, right? So all these technical indicators that we are using they are they have been derived from the price action. So instead of using technical indicators, why not having like closely monitoring our candles, the price action? So why shall we okay, of course, we can combine indicators. Of course, if you fancy indicators, why not? I like indicators. I'm using indicators, but I am trying also sometimes to focus on the candles, on the body of the candles, or the tail of the candles, to read firstly what the candles are telling me. So price action can be seen and can be interpreted by simply using only your candlestick, the Japanese candlesticks over time. Okay, so the only thing that you need is support and resistance levels and the close observation and a careful observation of your Japanese candlesticks. So yeah, that's why I advise you to use candlestick patterns. It's easier. They are easier to be read rather than line chart or the other one. It was let me put the MT4 on. Can you see the MT4? Yes, you can. So you cannot really clearly read the market by using line chart or by using the bar chart. Okay, some people are using bar chart, but I find it a bit difficult, okay, because it solely shows you the open, the body and the close, but it's not so obvious like the candlesticks. So with the candlesticks, I can see how deep the tail was to the upside, to the downside, the how big the body was. But with the bar chart, I'm struggling a bit to check the body. So I need to be very careful to check. Okay, here was my open price, here was my close price. So the body was that big. So that's why candlesticks are preferable, but it's solely up to you, of course. Okay, if you used to read bar charts, okay, fair enough, go for it, but definitely not line chart, because with line chart and even a bar chart, we cannot identify some Japanese candlestick patterns like Hamari, like equilibrium pattern, like to the bottom, to the tops, and so there are a lot of patterns, morning star, evening star, and so on and so forth. So preferably you should use candlestick charts because they will help you to visualize better the price movement by displaying, of course, the open, the high, low, and close value over time in the context of up or down days. Okay, so our aim with this webinar is to find order in the sometimes seemingly random movement of price, correct? So let's move on. Oh, sorry, here we are. So let's move on. First of all, a bit of introduction to the um, to the bars, to the candlestick parts, and what we should consider a bearish and a bullish pin bar. Okay, so since we said that the price action trading is exclusively solely the identification of the price action without any kind of fundamental or technical analysis, and is the identification of the trade condition that we are in order to take a decision to buy or sell or hold, firstly you need to have in mind that the tails of each candle, the body of each candle, are the first things that you need to have a close look. Okay, so because those the tails, the bodies, and the tails most precisely can sometimes help us identify our support and resistance levels. Okay, so how does price action trading works? First of all, identify a trade condition. So by checking our candles, we'll realize, are we in a bull market? Are we in a bear market? So with this way, we know whether we will open long or short when we find an appropriate time. So that's the first thing that the price action help us with, to identify the trade condition. And secondly, uh, it will help us to take a trade position based exclusively on our decision, on our understanding, on our thoughts. So it's a bit subjective, okay? So some examples of price actions that you can of price action tools that you can use is the fractals. Okay, you might say to me, but you said no technical analysis. I know, but they are quite useful because they put an arrow for you instead of just having in mind that, oh, over here I had a retest of the resistance or a retest of the support. So with that arrow, you don't need to remember. So we need to check for any swings. We need to identify our support and resistance levels based solely on the body of the candles and on the low levels and the upper levels of the candles. So we will put a trend line on in order to spot our support and resistance levels. Third of all, we will observe how strong the length of the body of the candlestick, and we will take entry points solely on any breakout of our support and resistance levels, okay, or any breakout of our swings or fractals, okay. This would be our entry points or our exit points as well. So let's move on. So as you already know, okay, a trade occurs only when two different parties, so the buyer and the seller, take two different views of the market, right? Of the same security though. So let's say in euro pound over here, we have both bulls and bears. So in the same same security in the same asset, but with two different views, right? So in theory, the buyers and sellers should have access to all the same information about the security, right? All of us, even if we are buyers or even if we're sellers of a particular asset, we have access to the same information. And what I mean by the same information, all of us have access to the economic calendar, so we know what kind of data are out from UK and how they might affect pound. We know what kind of data are out from Europe, so they might affect euro. We know whether I don't know, Mr. Boris is speaking or whether the Miss Lagarde is speaking, and so on and so forth. So we have the same information, same data. We know the same, the news, both of us, all of us, we have the same technical indicators, and we have the same fundamental analysis recommendations. If we search online, all of us can see the same things. So, but despite the fact that we have access to the same information, some of us decide to buy and some of us decide to sell. Okay, so we have opposition conclusions. So why does this happen? Why? So simply because each of us, each trader, individual trader, has a different judgment. Okay, so different judgment leads to trading with opposite views. Like we are not the same. Some people are thinking with a different way than others. So we have different judgment. So for example, over here, I have actually 1 hour, 1 hour um, 1 hour euro pound cross over here, an old one, not the recent one, as you can do it's back in November. So, and I have placed a 15 moving average, and I have seen that it crossed above my 20 moving average. Okay, so this is something that is visible to everyone. like you can, all of you can see this cross of the 15 moving average above the 20, right? All of us can see it, right? However, like for me, this kind of cross, a 15 above 20, for me is a buying opportunity, because I'm saying, okay, my short time frame moving average, which is the 15, cross above the 20. So in the near term, for me, this is saying to me that I can enter long, because there is a positive momentum in the near future. But for some others, this is a sell signal. Okay, so buyers may base their decision on the standard recommendation of the moving average crossovers, while there are others, maybe some of you might consider this to be like a sell opportunity, because they take a contrarian view of that standard recommendation to buy on crossover. So sellers may take a contrarian view of that standard recommendation to buy on crossovers, which will lead to an overbought situation, and hence it is better to sell. So we have two different views. I'm not sure whether you are with me so far. So for me, let's say, because I like moving average, so I tend to use them a lot. A cross of a short-term moving average above a long-term moving average is a buying opportunity, right? Because it simply said to me that in the near future it will get further to the upside. But from some other people, some other traders, this cross suggests that, oh, okay, eventually this crossover will lead to an overbought situation, so I could sell because eventually it will go down. So this is two different perspective. Okay, I wanted to make that clear, because you can understand that the judgment is objective. It's subjective. Sorry, it's subjective. So don't worry if the decision that you have made is very, very different to some others. Don't get confused by discussing things with others. Solely solely monitor your own chart. Try to read the candles. Try to build your own thinking, your own judgment. Okay. So okay, I'm coming back to why did I came back over here? We have covered that, right? No. Okay, so what I want, okay, I came back here because I wanted to mention that yeah, that okay. That is something I think something that I already repeated. Sorry for that. It was about the swings. But anyway, we'll see examples. So it's better to explain the swings and the support and how to identify support and resistance levels in the very next slide rather than here. So remember that the first step is to identify a trade condition, right? So let's move on to see how you will be able to identify the trade condition. So we have over here the S&P 500 weekly chart. So it doesn't matter that I'm using weekly, hourly, daily candles, okay? The daily charts, guys. It's just because I try to find the best examples possible, and this is also a webinar that I tend to repeat, so that's why I have some old examples. But if you want to, we can go straight to, once we are done with the webinar, I could go I could go to the to the MT4, and we could have more examples. Okay, so don't worry about it. So yeah, but for now I will go through the examples that I put in my webinar, so we'll be clear what the price action is and how you will spot your trades. And once we cover everything, I will go to the MT4 and to see one or two real examples. So over here, we have, okay, I see questions, but we have plenty to cover. So sorry, I need to go through the webinar, and I will come back with the questions later on. Just quickly saying, Akinola, I saw that you have facing difficulties with the PDF. Please send me an email and I will reply you. I will send you the PDF with an email. Olisa, yeah, if you're facing, guys, if you're facing problems with the MP4, please send me an email and I will send you the PDF via email. No, I'm not using MACD. MACD is my MT4, but my MT4 has nothing to do with the price action. Sorry for that. That was because I was doing an analysis earlier on US dollar index. That's why. But yeah, price action trading is solely without any kind of indicators. Maybe you can use fractals if you want to, but price action is solely on reading the candles, nothing else, nothing else. So clear chart. So okay, my MT4 was like that because I was doing a dollar index analysis earlier. If you check our webinar, I have posted the USA 500 and a dollar index analysis earlier. So I don't use MACD. Ignore MACD for now, my dear Uma. You're having a hard time, Emmanuel. Okay. Emmanuel has left. This is connection, I assume. What are the candlestick patterns one should check? There are many. I will go through some of them quickly, but there is a webinar solely on candlestick patterns like evening star, hummingbird, morning star, and double top, head and shoulders, and so on and so forth. Okay, but bear with me. Just get out of your mind anything else and just focus on the price action for now, my dear Uma. Okay, thank you. Everyone will get the recording. Don't worry. If you have any network disconnect, if you have any network connections, you are free to go, and our support department will send you the recording once we are done. Okay, we'll put a flag on Karabo question. Yeah, I need to go through. Okay, guys, I will ignore the PDFs. Please send me an email. Send me an email, please, at webinars@forex.com. So, okay. Joseph, guys, I'm seeing that you have a lot of problems with your networks. I don't know whether it's my side. If you're facing problems, you can go and I will send you the recording later on. Hopefully it's not from my side, but as I can see, my recording is keep going, is recording the webinar. So I don't have any network issue for the time being. So it might be your connections. I will send you a recording once I'm done, okay? I have your addresses. Don't worry about it. Okay, thank you very much. So I need to go through. So how to spot trades? Okay, how to spot trades? First of all, we need to identify, okay, support and resistance levels. Okay, before you do that, you need to closely have like an overview. You see, overview of how your market is trading. Is it trading sideways? Is it going up? Is it going down? So let's see, just a general view of how is it moving for the time being. Okay, so let's say, okay, that my asset is not moving anywhere. It's just going up and down, but like with the same range all the time. If you see it moving up and down, but the ups and the downs are always on the same level, okay, first of all, this means that your asset has stuck in a range, has stuck within a particular range. So that means that in general there is a bit of a consolidation in the market. Okay, there is a bit of indecision in the market. It's moving ups and down, but in the same range. So consolidation. So this will automatically give us support and resistance levels. So if your asset moving up and down, but every time the ups are really close to each other. The downs are like at the same, pretty much at the same levels. Yeah, then you can easily spot your support and resistance level. So if you just ignore, okay, if you just ignore that, okay, ignore it. And let's say that you're checking your USA 500 right now, and you're seeing it moving. You see that it moved the last few sessions within this range. So immediately you can spot by connecting the tops, connecting the bottoms. You can say, okay, this is my resistance level and this is my support level. Simply saying because it was bouncing. It was like retesting the upper level, never managed to break it, and it was moving down, never at the same level, pretty much at the same area, never managed to break it, and it was like bouncing between those two levels. So this automatically give us an immediate resistance and an immediate support level. So why is important to spot firstly your support and resistance? Because any kind of breakout above your resistance or below your support will give you an entry level. It will enable you to enter the market either long or short. Okay, so the first thing that you need to do when checking your charts is identify, spot the condition. Is it a consolidation? Is it an upward trend? Is it a downward trend? What condition is it? If it is a ranking market consolidation position, you can set your resistance at the top of the range and your support at the bottom of the range. Okay, so that's the first thing. Okay, so you can say to me, but how can I trade if I am in a consolidation, if I'm in a ranking? Firstly, you can be a bit patient, okay, until you see a decisive move and a sustained move above the resistance level or below the resistance level. So with this way, you will know that you can enter long if it keeps extending above this range, or you can trade short if it broke below the support and is sustaining a move below it. Okay, that's the quickest way to do it. Another way though is to trade this ranking market, this ranging market. You can trade consolidation. Who said that you can't? Okay, so let's assume that we're over here, okay, and we have noticed that it's going up and down all the time between these resistance support levels. You should have in mind that every time that your asset retest or is close to the support or to the resistance level, then it could be an opportunity for you to trade on the potential of a possible reversal. Why? Okay, so we are in a ranking market. Okay, so we have not in a ranking market. Every time that the asset bounce higher and retested resistance levels, then it turned down and it's going down to retest the support level. Every time that it bounces off from the support level, then it's going up to retest the resistance level again. So there is at those edges, at the edges of support or resistance level, there is also a possibility for you to take an entry based on the chance of reversal. But nothing should be like nothing should be left just for on the just to be. You shouldn't be solely focused on the fact that every time that it hits resistance it will reverse, or every time it hits support it will reverse. No, you need to check your candles. Okay, your candles are very, very important. Why? So we have this bounce between resistance and support level. Okay, and what the theory said is that every time that your asset is close to support or your resistance level, but you have identified that it comes along with an indecision signal, then we have we will see the asset reversing. Okay, so there are two criteria to trade on a reversal. First of all, your asset should be close to support level or resistance level, and next you should identify indecision. Now, how you could identify indecision? So let me zoom in a bit. Okay, and take the example that candle. Okay, so I have seen that it was like retesting my support resistance level several times. Retesting, didn't manage to break it, and suddenly it moved down quite aggressively. Full body candle without any tail, a tiny tail below that. So what that means, if you don't have a tail, a long tail to the downside, okay, but instead your close price, it was very close, it was near your low price, that means that bears are having the full control and they managed to close the session very close to the low price. So bears are in control. This is what this candle is saying me. Full bearish candle with the close price very close to the low price. Okay, first, this is the first thing. So it started reversing and it's ready to go down to the support level. But the next hour or the next session, whatever, I noticed that this candle, okay, it has a small body, bullish body, and a long tail to the downside. Okay, so this is my first sign of indecision in the close to the support area. Why? Because I had a lot of steam to the downside. So bears managed to push the price down over here, creating this long tail down, but the bears, they have fighted so hard that they have managed to close the session with a positive, with a bullish candle, but the candle, the body was small. So if you see small body, very tiny small body, and a very large candle, very large tail, typically what we are seeing is that if the candle is like, if the body is 3 times smaller than the tail, then that there is indecision. Okay, so this is what we are seeing over here, indecision. Okay, a lot of sellers but also a lot of buyers creating this indecision over here. So this was my first signal that there is a big fight on whether the asset should go down or whether the asset should go up. So so is it really the time to believe for a reversal? No, wait. There are 3 parts which should be included in a reversal trade. A reversal trade, I mean, if I had spotted this situation, I should like take a long position because I would be living in the reversal to the upside again. Okay, but a reversal trade includes 3 parts. First of all, you need to have a presetting trend, which I have over here. I had a decline. I have seen a decline, right? Away from the resistance level. Okay. First of all, you need to have a presetting trade. Then you need to have, or you need to see, indecision on the support or resistance level. So over here, I have indecision. I have indecision in close to the support area. Okay, and it was not solely on this indecision candle, but also on the very next ones, because I saw that they didn't manage to move anywhere. They were moving sideways. They're bouncing over here, neither posting a move to the upside, neither posting a new low to the downside. So there wasn't a decision in the next few candles as well. But the very first candle that showed me indecision was that one because of its very small body, which was 1/3 of the tail. Okay, so 3 parts. First of all, we need to have a presenting trend, which I have it indeed. Down, it's going down. That candle down, and these lower highs over here show me that I am in a decline right now. Indecision on the support level, and then the third part, in order to complete my reversal trade, will be a sign of a reversal of the trend. Okay, so in this example, a clear um, the clear sign that there is a reversal of the trend was those 2 consecutive bullish candles. First of all, because this body candle, so we have 2 in a row, but mainly this candle was a full body one with a small body to the upside without any tail to the downside. So the sellers have been strong, they haven't been over here. I could say there is no tail to the downside. So the sellers weren't here. We had the majority, we have a clear control of the bulls. So creating a full body bullish candle with a tiny tail to the downside. So that suggests no sellers or the lack of sellers or the tiny selling pressure. So a lot of buying pressure, which managed to move away from the previous 6 consecutive candles. Okay, so that was my reversal sign. So I could enter long over here at the close of this candle with the target at my resistance level or slightly below the resistance level, just to be on the safer position. Okay, so now on the flip side, if your asset is on the resistance level and you're searching for a sign whether it will go down again, so the same situation stands. First of all, do I have a presetting trend? Yes, I had. I had this bullish trend over here, and since then it's moving sideways. Okay, so I have a presetting trend. Do I have an indecision? Yes, I do, because for 1, 2, 3, 4, 5, 6 consecutive day sessions, it didn't manage to break above it. But now I am seeing that it has stuck within this range, bouncing without any clear direction. But nonetheless, I can also see, I can see a lot of indecision candles actually. I can see these two, that one, that one. So a lot of indecision. Why? Look at that. Let me zoom a bit. Doji candle, tiny body. Close and open prices are on the same level pretty much. Another indecision candle. Long tails, but the body, the open and the close price are like same. Indecision. Another indecision over here. Small body. Bears and Bears didn't manage to push higher again. They are, and the open and the close price are close to each other. So they were a lot of indecision signals over here. But the key, the very first one and the key ones were those two consecutive ones. So I had a presetting trend. I had indecision, and now I'm looking for a reversal. So for me, the reversal should have been initially be on this candle, okay, or that candle. But to be honest, it will be that. Let me just draw it. The break of these levels, this level which was sustained for many sessions, was my breakout and my sign for a trend of reversal with target at support level and stop loss like either at the resistance level or above the previous high. Okay, this is how you could trade solely on the candlesticks once you are in a consolidation mode. Doji candles, Iman, doji candles are always suggesting indecision. And not only the doji candles, but also the candles for which their price is very close, their open price is very close to the close price. So the small body candles. There is indecision if you have a very small body candles or if you have doji candles. So could enter a short put trade exactly, man. You could trade a short. You could take a short entry. Okay, for me, a safer entry should be on the break with a pending order or something on the break of this support level. But for many of you might be, I don't know, an entry point could have been that bearish candle after those two indecision candles, so two doji candles, so that could be a long position. But for me, it was that one. This is where I could take my entry with target at support or just slightly above the support and stop loss at the latest high, which was here, or at the resistance level. This is up to you solely based on your year's risk and reward. Okay, so that's our first example. Let's move on. That's solely on consolidation ranking market. Let's move on another example, which is clear, like a clear uptrend. Actually, okay, this is a different example, just to give you a brief idea of how you could use the candles to take entry and exit points. So here we had it was a dollar yen, if I'm not sure. I thought it is dollar yen, but it doesn't really matter. So okay, so I have seen that. Sorry, I need to take a quick. It's 40 degrees over here, so it's very hot, and it's even make it difficult to work. So okay, this is another example. Uh, okay, so um, this is quite different. Okay, I have managed in this example to identify my resistance level. Okay, I will not try to put lines on because they're never straight. So this was my resistance level, um, this this level over here. Okay, because I noticed that it was retested several times. I never broke it. That was my initial support level, resistance one, support one. Okay, so I have noticed that my asset managed to break the resistance level over here. It didn't manage to close above it though. Okay, it break it. It didn't manage to close above it, but the next session it managed to close above my resistance level. Okay, is this now the time to enter the market? What's your own opinion, guys? You cannot see my screen. Oh, there are a lot of connection issues today for some reason. Um, Let me check whether it's my connection, guys. Sorry for that, but if you are so many that you're struggling to hear me and see my chart, maybe it's my connection. Let me double check. Let me Skype quickly. Just Stuart, maybe he will be able to check. Um, I chase my colleagues to join our webinar just to make sure that they can hear me loud and clear. So, okay, I will keep going because anyway, this session is recorded, so you will soonish have the YouTube link. And even if you don't have, even the connection, your connection is not good right now, or if it's from my side, you will be able to see the recording, okay, later on. So I need to go to move on. So as I was saying, it managed to move higher, to close higher, but is this a good entry level? I can it very clearly. I can let me check your replies. A lot of questions, a lot of interaction. Okay, okay. Um, Dada, the recording will be sent to the your email address, the email address that you have registered with. Please explain the swing. I will come later on with that. More light on candle closures. Okay, more light to the candle closures. Noted. I will send to everyone the PDF file. Don't worry about it. How to understand the okay, wicks and bodies. Okay, there are a lot of people asking about the tails, the wicks and bodies closing, which is more important. Okay, guys. Okay, that okay, let's take a step back. First of all, you need to have in mind that if there is a candle which is a bearish candle, okay, a bearish candle, in my chart the bearish candles are in red, and it's a small body one, but the tail, its tail, it has a very big weak tail or weak or whatever you can say it as with any name you want. If the body is small and is bearish and the tail is upwards, okay, then this is a bearish pin because, okay, actually even if the body is bullish or bearish, as long as the tail is above and is like 3 times higher, lengthier than the body, then this is a bearish bar. Why, guys? Because what that suggests, it suggests that the the buyers are try to push the price higher, 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 but the sellers were so many were like in a number they had the control. So if we have one buyer, we had 3 or 4 or 5 sellers, and the sellers were so there was a lot of selling pressure that they won the buyers and they pushed down the price again. Okay, so no matter if the body is bullish or bearish, as long as the body is small and the tail is upside and is 3 times the size of the tail is 3 times more than the body, then this is a bearish bar. Okay, it's a bearish signal. If the body is small again, but instead of a tail to the upside, we have a big tail to the downside, so below the body, then this is a pin bar, bullish pin bar, simply because we had, okay, a lot of selling pressure that managed to push down the price at that level, but the bulls took the control and they pushed back the price higher. Okay, so this is why you should take care of the tails and the bodies. Okay, you should have this in mind. On the flip side now, we have discussed when we have a bearish and a bullish part based on small bodies. Now, things with the big bodies like that one, are quite clearer. If you have a full body with small, tiny tails up and down, you will ignore the tails if they are tiny, and you will emphasize on the body because it's so big that clearly says to you that you know that's a selling signal. Sell. Full body candles, clear full body bearish candles are bearish candles. Full body bullish candles like let me find an example. Oh, cannot find an example. Okay, that one. Let me zoom in. So you see, full body bullish candle, tiny tails, but definitely a full body candle to the upside. So clearly bullish candle. Okay, that's why you should emphasize on the body and on the tails, of course. But here we don't have tails, so it's clear that there is a lot of bullish pressure, buying pressure. Okay, so I think now it's clear. Fingers crossed. I want to believe that it's clear. Um, is it fine, Akim Huchko? You're the one that asked for wicks and bodies closing. And I was also Mr. Okay, I have a lot of questions I need to go through. So let's continue. Now, okay, in this example, I think I didn't got an answer from you guys. I think, but there are so many questions that I cannot really keep a track right now. Let me go down. Oh my God, there are a lot of questions. Okay, Uman is the one that replied. He said, I will enter a long position at the next candle, keeping recent lows as stop losses. Okay, so you would enter long at the next candle. At the next candle, I assume you are saying on that one or the next one. So the next candle after it closed above my resistance was a doji one, my dear Uma. So that was a good decision, you think, to take an entry on based on an indecision candle? So no, I will say if I understood correctly your reply, of course. So we had over here our first closure above the resistance level. For you, so for many of you, this would be a good entry point. For me, it's not, and you shouldn't take that as an entry point because it could easily turn back down again. It's not far away from the resistance level, right? And it's just one session, so there is no confirmation that it will continue moving to the upside. So the entry, okay, the entry for a long position should have been on the break. Okay, so we have a preceding trend line, we have indecision, we have indecision again, indecision sideways. So a good entry point could be either up there, could be either at after at the closing of this full body candle. Okay, this could be a long entry of a long position, or if you just want to get into the market on time and not being late, you could have set a how can I say a pending position once your asset breaks above your latest high, which was that one on the break of on the break of the initial resistance. So once it breaks above it, then we could have get an entry level. So in this example, the entry position, the long position should have started on this jumped higher over here. So after the decision, that should be my entry point, or that one is based on your strategy. Okay, with the targets now, so how you can set your targets. Your target should be at the same distance. Okay, so I'm measuring my previous support and resistance level. Okay, and I'm taking, okay, I'm taking the target based on this distance. So either I'm putting again this, okay, I cannot really drag and drop it to show you that it has the same distance, but these are equal, okay? So you can set your target based on the resistance, on the distance between the previous support and resistance level, or at halfway of this distance, okay? So it's up to you. But your stop loss could be set either at the resistance level, on the previous resistance level, or slightly below it, just to be on the safe side. Okay, entry stop loss or entry stop loss and targets being set based on the distance that we have measured between the previous support and resistance levels. Now, that was my long entry. Now, you can have there is another entry over here. Since our asset retested the new resistance of the asset and it has started reversing. Okay, so this is what I call an entry point of a short position. Okay, so now let me clear everything and I will explain again. So, okay, that was, okay, let's clear everything. Let's assume that you have your resistance, your first resistance level, your first support level. It managed to break it and it's moving above it, but you missed the opportunity to enter long, right? Okay, so there's nothing really to worry about. It's just you need to spot whether you will identify your very next rejection of resistance level. So what I mean by that, so over here we have resistance and support, right? And we have measure this distance. So by measuring the distance, once it broke, you can set your next resistance level at the same length above that breakout. Okay, so measure the distance between those two lines, your resistance support, and after your asset has managed to break above the first resistance, set your second resistance based on the same distance. Okay, so here is my second resistance, which has the same distance from the first resistance as the first resistance had from my support, right? So now the first resistance has turned into support, right? So now my asset is moving within this range. My new resistance and my previous resistance has been converted into support. Okay, and I'm seeing that is moving higher and higher and higher, but is struggling to break my second resistance. It struggled once, it struggled twice, it struggled 3 times, but at that level, it gave me a bit of an indecision signal. Small body candles, long tails, and that was the one who gave me a bit of more confirmation regarding indecision, because we have long tails above and below, but a very, very small candles. So indecision, presetting trend, indecision. So now what I'm really waiting for is a signal that it has turned lower, it has reversed. So there could be different entry points on this short position. Either an entry point based on the latest low, on the breakout of the latest low. So the latest low was here on this tail. So an entry could have been that one, or an entry, a second entry can be on the close of this full body candle. So once you see this candle closing with this full body like strong bearish candle, that could be another. In case if you missed entering the market like on the break of the previous low, you can wait for the candle to close and to see whether it will close like with a like a strong bearish candle. If it does, you can take an entry then. So that was the entry point number one, entry point number two. So now where you should set your target? Simply on your support level. So over here, target, where you should have set your stop loss, either at the above the high of this candle, or just to be on the safe side, on your resistance level or slightly above it, okay, at the latest high. So stop loss, okay. By the way, over here, if you see, you can have multi targets. So what I mean by that, you can open two targets with an open position with two targets. The first target will be that one, and the second target could be that one. Of course, if you decide to multi target in your position, you need always to have in mind to split the position with a logic way. What I mean by that, your initial target who should have the majority of your balance. So you should risk 70 to 80% of your trade over here and the remaining 20% on the second target, because 20 or 30% on the remaining of your second target, because um, the likelihood of reaching target 2 are less than the target 1. So the majority, if you want to take multiple targets, the majority of your position should be on first target than in the second target. So this is a way to trade solely on the based on the indecision candles, on the bodies. You see, that was clearly a good signal that it started reversing. So even if you missed this indecision, even if you missed this long position, even if you miss this indecision, that candle, and once that candle closed and it closed so aggressively down, it was clear that it's time for a reversal. That's why you need to be patient for the candles to close before taking an entry. If you don't want the targets to close, or you don't want to be 24 hours a day on your PC, use pending orders, okay, with stop losses and with targets. Okay, let's move on to another example. Guys, are you with me? um, guys, the hand, it's in the handout. Handout. I don't understand why you cannot download the handout that I just sent you. That's weird. That's very weird. Okay, I don't know what's wrong, but I have put the PDF file on. Never mind. Asante, you're asking about the MAs, but this is a price action. Okay, I tend to use moving average for 250 moving average in the daily chart, and intraday I tend to use exponential moving average 9, 5, 20, and 50. Okay, that was just off our today's webinars. So yeah, okay, here we have he actually okay, I would like you to ignore the analysis over here, and I would like you to clearly see this consolidation over here. Is it clear? Is it like flat? You can clearly see that it's flat, right? I'm glad that Adi has managed to download the PDF. Thank you for that. It's in the handouts, guys. Handouts. In our GoToWebinar right now. In the same, pretty much in the same section, like below the section that you have found the question box. So there are other boxes like handouts or what else? A chat. So it's over there. It's in the handouts. So, okay. Over here, we have a clear flat situation, flat consolidation. So it was going up, down, tiny, 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 tiny candles, small candles, small bodies. So that, without even spotting support and resistance, that's suggesting indecision, right? And indecision, sorry, typo. So, and without a bit of a lot of hassle, I'll just track a support, a resistance, and support line. So a resistance on my on the high levels and a support on the low level, or on the on the lower fractal, if you prefer to use fractals. So this is very without any kind of technical analysis. Ignore MFI over here. I don't know why I have put that on. Ignore, that was my daily setup. That's why it was on. But if you ignore everything and just solely focus on over here on this reaction, you can see that full body bearish candle, that it was a very big, nothing to like, not tiny like that one's, very big, that broke my support line. It broke literally the latest low that I have seen. It was a clear picture. It was clear that it's time to open a long position, a short position, sorry. It was pretty clear. But even if it wasn't, by being a bit patient and wait for the next candle, which was again bearish, and even though it was a smaller one, you can see that even though it was a small one, the fact that it didn't have any tail above, so it was only a bearish candle with a tail down, is suggesting that the sellers are more than buyers and that there is a lot of selling pressure. So that could have been another entry point. With targets, where can you find targets? Simply by measuring the distance over here, like I helped you, like I taught you earlier. So where is my pen? So measure the distance and put the target at the same distance from your entry point. So let's say if that was my entry point, okay, so my target should have been like here, my first target 1. If I wanted more than one target, then again I will measure again the same distance, and here is my target 2. So you can use as targets either the distance between support and resistance levels, or multiples of that distance. 2 times the distance between support or support and resistance level. So the distance and or multiples of that distance. Okay, that's a bit tricky, this example. I will move to another one. Okay, which in which we don't have a pretty much a consolidation, but we have a bit of a more like complicated chart over here. Yes, and yeah, exactly. Your microphone is down. No, it's not, guys. It's not down. Oh my God, what's going on today? Oh, no, my microphone is fine according to webinar. Test, 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 test. Hello. Yeah, it's fine. Okay. So, as I was saying, Okay, now we have a different example. I had this chart. It was a stock actually, so ignore what kind of asset it is. What matters is this example that I found from my dear friends back to the stock trading infocenter.com. So I found this example and found it very, very good. So I wanted to share it with you. So I had a stock moving down with some corrections, down, posting lower lows, lower highs, okay, and so on and so forth. But suddenly it found a bottom and it started posting higher highs, higher lows, sorry, but equal highs. Okay, so the stock trading infocenter.com, the guys over there, they spotted, they said that, okay, it has always the same highs. Let's put a trend line on. And they had put this trend line. What this trend line is? Resistance, immediate resistance, because we have more than 3 highs at the same, pretty much at the same level. More than 3 highs, 3 high levels, high candles, high levels at that level. So they have spotted that it's coming, it's retesting that level. And always going back again, retest going back. So they have put that trend line on, which is my first resistance, my immediate resistance based on these equal highs. Now, I don't have equal lows, similar with what we have seen over here or similar with what we have seen over here. I have, however, ascending lows, sorry. So I have higher lows. So I have 1, 2, 3. So they have decided to put the trend line on, and that was our support level, our immediate support level. So now, okay, I haven't used any kind of technical analysis. As we said, this is a price action trading. So how you can trade something like that? Simply, you need to wait for a breakout point. We have already spot the trade condition, right? The trade condition is an ascending triangle. So it's moving within a triangle, but with the direction to the upside. So it's moving in an ascending triangle. So we have achieved the first condition and we have spotted the trade condition. The asset is trading on an ascending triangle. So the next step was to find our resistance support levels. We have done that because are solely our the lines of the triangle. So resistance is the upper one, the support is the lower one. So now what we are waiting for, we have identified this trade condition, we have identified resistance and support level. Now we need to see a breakout, right? And indeed, we have seen the breakout over here. But that wasn't a time to enter the market, right? We need confirmation, right? We need confirmation. So that was my first breakout point. The very next one, okay, it was bearish, so I couldn't take an entry. Then I had a bullish one, but not a strong one. It was the high. It was pretty close to the previous bearish candle. I had another one with pretty much the same high. So let me clear. See, all these consecutive 3 candles, these bearish and the 2 bullish ones, they didn't manage to break above. So they have this pretty much the same high. But now I have this full body bullish candle which managed to move further to the upside, and it broke this latest high and it extended further away from my resistance level. So a good entry point in this example should have been that level entry. You can say to me that, but Andrea, afterwards it started to move down again. It doesn't matter as long as you have set your stop loss at an appropriate level, then you will not kicked out of the market. You will remain in the long position, even though it came down, but it jumped up again. So even if you took the trade over here and you enter long, if you have set your stop loss the way that I taught you to do, so remember, either using the latest low, or just to be on the safe side, go back to your resistance level. Now that resistance level reacts as support, right? And put it slightly below your resistance level, which is now is a support. Or if you want to, over here, below my breakout point, slightly below my breakout point. So you see, even though it turned against me, it didn't manage to take me out of the market. Instead, it came down, it reversed the resistance level once again, but it bounced away from it, and now this resistance level is my new support level. Okay, so long position has been taken with my entry over here, with my stop loss around here. Okay, fair enough. Where is the target? Now it's pretty much the same mentality. You need to measure the distance between the resistance and the support level. But because we are in a descending triangle, in an ascending triangle, because we're in a triangle in general, we need to take the distance on based on the base range over here. So from the beginning of the triangle. Okay, so we are measuring this distance. So we're measuring the distance. We're coming over here on the breakout of the resistance level, and we're taking the same distance again over here. And here is my first target. Okay, as I said, you cannot more than one target. You cannot second target maybe 2 times the that range. So be another arrow to the upside with the same distance, or halfway. So over here. So the first target should have been set on that distance, and the very next one will be that base range multiplied by 1.5. So we'll take a halfway. Okay, that's easy peasy. It's up to you, but solely take in mind that you need to risk 70 to 80% of your position on the first target, and the remaining 20 or 30% to the remainder targets. With this way, once your first target will be hit, you will have locked the profits, and even if it turns against you after it hit the first target, you will not face any major losses because you are already on profit. You can find out more on the multi-target, how to multi-target your position in our webinar. So there is a webinar solely on multi-target positions. Now, oh my God, it's already an hour and a half. We have more examples actually, but let me skip some of them because they have already we have already explained lots. This is another example, dollar yen. You see, I have multiple resistance, multiple support levels. Why? Because initially I was over here, found my very first support and resistance levels. After that, my asset managed to broke my resistance level, and I took, let's say, I took or not taken, maybe I missed it. Once it broke this resistance level and it kept extending to the upwards movement, I found a new ceiling, a new resistance, because I noticed that for 1, 2, 3, 4, 5 consecutive sessions, it struggled to break above this level, but it turned down again. So that was my next resistance level. Okay, now that resistance level was turned into support. So you can see that even if you missed an opportunity, a breakout could eventually give you another opportunity, a new range. Will give you a new range, will give you another opportunity to enter the market on the very next chance that you will have. So don't worry if you missed something, okay? Because markets are moving sideways, ups and downs all the time. So even if you miss that breakout and the opportunity to enter long over here, you might have the opportunity to enter short on this reversal, because we have 1, 2, 3, 4, 5 consecutive hours of a failure to break that resistance, and it moved down with a very strong candle over here, and the tail wasn't bigger than the body. So since the tail wasn't bigger than the body, then we have, you see, that's the difference. If the tail is 3 times bigger than the body, then we should take the direction of the tail. But since over here the tail is smaller than the body, is not 3 times higher, okay, is smaller, then this is a clear a bearish candle. So that triggered my attention. It was away, it moved way down, but it closed over here. So this could be an entry point to enter short with my target at my previous resistance level. Even if I missed that opportunity, I had another opportunity over here. Reversal, indecision, down, retested, indecision, because my tails have the same length and my body is not, it's not like my tail it's like the body has pretty much the same size as the tail. So indecision until I got that candle, which was a strong body, and the tails wasn't as big as the body, so the tails won't matter for that particular candle, so I could enter long. Simple as that. Okay, so even if you miss something, don't worry. Okay, don't worry. Let's move on because I wanted to cover. Okay, can you see that fractals help us a bit with setting our support and the resistance levels? Consecutive fractals is resistance, consecutive down fractals support, consecutive up fractals new resistance, consecutive down fractals new immediate support, and so on and so forth. Measure the distance and set your targets according to the multiplies of this distance, or one or the same distance, or 1.5, 1.5 multiplies of that distance, and so on, or twice the distance, and you will set your targets accordingly. Okay, I think I will take no, shall I okay, shall I take questions now? Let me okay, so guys, I want you to now is the time for questions. Okay, I will come to these extreme scenarios later on, but I would like firstly to show you to wait for your questions. Okay, now is the time to give me some questions. So I can see that there are plenty of questions. Okay, so I prefer to reply to your questions instead of seeing some more examples. Okay, so let's take it step by step. What time frame is suitable for trade price action? Any kind of a time frame, Danjuma. Okay, so however, if you decided to try to use a price action strategy, you need to stick on one time frame. So if you are if you like 1 hour chart, stick on 1 hour chart. Don't go up and down to the daily chart, to the 30 minutes chart, to the 4 hour chart in order to take a decision. You need to stick on the time frame that you wish. Okay, because if you go ups and downs to different time frames, okay, let's say here is a 4 hour chart, and I have put my support and resistance levels. Okay, actually over here I have an ascending, pretty much kind of ascending triangle. Okay, so I will take my decision solely on the 4 hour candles. I cannot go down and up daily or 1 hour 30 minutes to take a decision. No, you need to stick on one time frame. Okay, if you found an ascending triangle, for example, in the 4 hour chart, stick with it and try to check the bodies of the candle on that particular time frame and don't go down or up. Okay, stick to a single time frame. So you can see over here that US index didn't manage to move above the 156, so resistance level for many consecutive times. Over here I had higher lows connected, breakdown, body, strong candle with small tail. So there's a lot of selling pressure. A bit of indecision, but again, it moved down. Okay, simple. You see? Indecision, small bodies, but I have a big one over here, which with a small tail, the tail is not 3 times bigger than my body, so there is no indecision. That's a clear selling pressure. So that's it. Simple as that. Stick to a particular time frame. So I have replied to that one. Will there be any webinar on Elliott wave? Yes, there will be. I'm not sure if. Let me check. I think I have put it in my June's schedule. If not, I think I did. No. Yes, I have one on the 23rd of June or March. Okay. Um, I don't have one on patterns or candlestick patterns right now, but you will find the candlestick patterns on our past webinars. Okay, on our past webinars gallery. Kindly send me the recording. I will. Don't worry about it. Let me see the questions. Hello. In the light of this trend using price action as basis for trend, do you advise a zero or premium account to be open for a beginner? For a beginner, I firstly advise you to open a demo account. You need to get familiar with the platform, with the MT4. To try price action on demo account, why not? But on what kind of account to open is on you. You should really, because every single, like the zero spread account offers you nearly zero spread on Forex. So if you want to, if your aim is to trade Forex, let's say, zero account will be good for you. But I don't know exactly your preferences, so I cannot really advise on that. So yeah, first of all, demo account. Second, go through our different account numbers, see what they offer and what you like the most, and then take your decision. Can I use moving average on price action trading? Oh, no, actually price action is what it says solely on the candles. If you want to, like before you enter the market, to just have an idea whether it's above or below your moving average, fair enough, you can add it afterwards just for further confirmation. But the art of price action trading is exactly that, the beauty of reading the candles without any help or confusion sometimes of the indicators. So maybe the indicators and the moving average will confuse you instead. Okay, let's take for example this your dollar index. Let's say if I put the moving average right now here, my 50 simple moving average, it doesn't really tell me something over here. You see, it might confuse you. That's the art of price action. Solely base your decision and your targets and your stop loss and your entry solely on what the candles and the body of the candle is telling you. Remember, the body of the candles saying you suggests you how strong the movement is. Okay. So I'm not sure whether the moving average will help or they will confuse you. So that's why you need to decide what kind of trader you are. Are you a trend trader, a price action trader, or you are a trader that prefer to use indicators instead? You don't like price action solely. So try and you figure out how what kind of trader you are. In setting second target, do I need to put a new stop loss? You can keep the existing one, or you can use trailing stop. Okay, Dante? But yeah, you can move and drag and drop the stop loss on the second target. Trailing stop is quite nice for a second target and third targets in general. How do you differentiate breakout from a fake out? Okay, this is exactly what we show. Remember, so you see, that's why I was insisting to wait and not taking the entry over here, because it could have been a fake out instead of a breakout. It was a breakout because I was waiting for this candle to show up, or at least for the break of those latest highs to broke, in order to confirm that it wasn't a fake out. But nonetheless, if you set your stop loss at an appropriate level below your resistance levels at this situation, even if it turns against you, you don't have much to lose. It will be tiny because you have set your stop loss very, very close to your entry point. Okay? That's why it's essential to set your stop loss at an appropriate level, and always wait for confirmation. If you're waiting for confirmation, you will end up with a breakout and not a fake out. That's why you need to wait for confirmation, my dear Danilo. I'm a beginner. Where do I get your webinar gallery? I will send you, we will send you a recording in your email, and in our YouTube channel, you will find all of our webinars. YouTube channel, Hot Forex YouTube channel. We have all our webinars over there. Hucha, I cannot advise what's wrong with your MT4. Can you please contact support? They are 24/7, 24/5 online and will be able to help you. Any specific book for reading price action? Actually, I had one in mind. I'm not sure whether I should mention it. I will text you a good one. A good one. There is one called price action, price trading price action trends. But it's quite nice, but I don't know how expensive it is. Uh, there are lots actually. One of the best is the Market Wizards. I'm not sure whether you have heard it before, by Jack Schwanker. Okay, it's a very good one. So does it mean that when trading with price, you should only stick to one time frame? What about the top-down analysis, the price action? First of all, Abasi, what kind of trader are you? Are you intraday? Are you 1 hour, 4 hour? What's what you like, what you prefer? Stick with it, or stick on the time frame that you have spotted resistance and support level. Okay, stick with it. If you went through your charts, okay, and you have you have identified that is struggling to break a resistance at 4-hour chart, stick with that one. If you are like you were monitoring your chart and you have noticed in the 30 minutes chart that it was struggling to break this range, stick with that one. Okay, stick on the one that you have spotted a trade condition and you have spotted a support and resistance level. Okay, stick with one. I am used to use 3 time frames. Fair enough, but maybe for each time frame you have a different decision. So if in the 30 minutes chart you spotted this consolidation and the breakout of this consolidation to enter short, sorry, maybe in the 1 hour chart, okay, for the same um, period of time, maybe that was a bit late to enter, or maybe it was giving you different, let's say 4 hour chart, same. So I wasn't. Uh, no, you will get confused because you see in the 4 hour chart, my break, it doesn't give me consolidation. I have an ascending triangle instead. So you see, the 4 hour chart, I'm getting an ascending triangle with a breakout at 99.68. But in the 30 minutes chart, I have spotted the breakout much, much earlier over here with targets like if I measure it 45 pips, I got my entry, I'm measuring 45 pips, target hit it, bam, done. You see, so each time frame will give you different entry points, different targets, different stop losses, and so on and so forth. Why do indicators confuse me? Indicators may filter out false signals. Yeah, but they might don't comply with the price action enables you to. Okay, you need to have something in mind, Uma. Too many things or too many indicators or too many different strategies at the same asset will get the whole thing more complicated. That's why you need to stick to a strategy. If you don't like price action, then and you prefer indicators and you feel more confident with it, then it's better to use indicators. If you like price action and you find yourself that is doing greater in the price action, then stick with price action, but don't get things complicated. If you from one hand you're checking price action, from the other hand you have also um, 1, 2, 3 indicators, another 4 moving average, Bollinger's pivot points, and so on and so forth, it gets complicated. At the end, you'll confuse yourself and you might take the wrong decision. Okay, so keep it simple. Decide what you want, what you like the most. If you like price action, stick with it. If you prefer a combination, but with a combination maybe of fractal solely and 1 or 2 indicators, that's fine, or moving average and price action, that's fine. But price action is only focusing on the beauty of reading the price, nothing else. What is the difference between a trend trader? Trend trader is solely on the okay, trend trader is solely on trend, solely on the focus on trend. So let's say I clearly see a trend over here. I'm putting my trend line. I'm having a trend. I have a breakout of the trend. So that suggests me that is time for consolidation or a long position. But it's they are solely trading on the trend. Or let's say they are trend traders are usually tend to trade on the direction of the trend. Okay, so for example, I want to have it. Okay, here I had an upwards trend, right? So trend traders, if they spot a trend, sorry, they're going along with the trend. So as soon as they spot a trend, then they are opening position on the direction of the trend, nothing else. If their asset moves away from the trend and breaks their channel, then they exit the trade. They're solely without any indicator, solely on the channels, on the trend, nothing else. The price actions are focusing on the candles, on the bodies, not on the combination of all the bodies together, on the candles together, but solely on each one of them. Okay, so price action is pretty much a combination of trend and yes, price action combines also trend trading as well. So I have a preceding trend. I have identified indecision. Okay, and I have now identified a breakout. indecision, and a move down, so entry level. So price action, it has a bit of a trend trading inside. Christopher, you are right. Mom, I seem to prefer price action trading as thought by you today than trade based on indicators, but I'm taking and I seem to prefer price action as thought. Yeah, why not, Akinola? Try it. Maybe make some tests without taking position. Write that down. Okay, I should have take long position and put that down on that okay, on that asset with that entry point and that target. Wait to see whether it will confirm. Write down all of your decisions and see whether they have hit the target, to see whether your decision based on price action are like good, are you are, and with this way you will get confident. Have a diary. Put down any decision that you will have made if you follow a price action trading. With this way, you will realize whether you prefer price action or indicator based trading, and whether you are getting better on the price action trading. Why not? So, other questions, other question. Um, uh, so, there are a lot of it here. Um, okay. There are a lot of questions about PDF. I will give it to you. So, guys, since you don't have any other questions other than the fact that I'm seeing a lot of people requesting for PDFs, which I will provide, I will show the very last. Oh no, there are actually more questions. Oh my God. Uh, I think I will reply everything with an email, because we are already 2 hours session, so I need to close the session. I have seen your questions regarding gold price action, swing trading, but I'll need to close the session, guys, because there are many questions and I need to reply them via email. So I will try to email you today with all the with all the replies. But yeah, I will end the sessions, because we'll end up with a 2 hours recording. The only thing that we highlight is that you need to have in mind when you're taking a trade price action trading, is that your targets should be set based on the distance that we mentioned between the support and the resistance level. Okay, your stop loss should be behind your support and resistance level. Okay, not too wide, not too narrow, behind the support and resistance level. Your targets is a very good indicator to set your target is the distance between the support and resistance level. And also have in mind that the weaker the better, the less barrier is in that area. Okay, so and also have in mind to place an appropriate risk and reward ratio. Don't get greedy. Don't put a target like 3 times, 3 times, or I mean 10 times more. Don't put the risk 10 times more of what you are you will get profit. Okay, risk and reward should be appropriate. 1 to 2, 3 to 1. That's fair enough, but don't get greedy. What else? That's more examples. Resist support level that turn into resistance later on. Breakdown. Full body candles. 1, 2, 3. Full body candles. So that wasn't definitely a fake out. It was a clear breakout with time to get an entry over here. So more and more examples that you can check in the recording. So I'll leave that for now. I have it in the recording, so you can check those examples to help you having a better understanding of how you could take your entries, your stop loss, and your targets. So I need to close the session. The forthcoming webinars are like the Dow theory, trade the news with Otto, live analysis with me next Tuesday, reminiscence of the stock operation. We'll have a giveaway over here of a book if you would like to join Stuart. We have volume weight average price indicator, and then we have also the June schedule as well. We have plenty of webinars that you can attend. Also the Elliott wave that Uma asked earlier. So, and also the difference between risk action and mean reversion with Otto on the 25th of June. So I will reply to your questions via email. Thank you very much for attending. Hope you I help you with your questions. And for anything else, just email me. I'll be here to reply to you as soon as possible. Thank you very much for joining me. Have a great day ahead and see you again tomorrow. Okay, bye-bye.